Since gaining independence, the Indian government has recognized the critical role of a sound and equitable tax system in driving economic growth and achieving social objectives. To this end, various tax reform committees have been established over the decades to review, simplify, and rationalize the tax structure. These committees have played a pivotal role in shaping India's fiscal policy. Here is a detailed discussion of some of the most significant tax committees, their objectives, and their key recommendations. 1. The Direct Taxes Enquiry Committee, Wanchoo Committee 1971. When and why set up? The committee was constituted in 1970 under the chairmanship of Justice K. N. Wanchoo, a former Chief Justice of India. It was established against the backdrop of a high tax regime and widespread tax evasion. The government wanted to identify the causes of black money and tax evasion and suggest measures to counter them. Objectives: to inquire into the extent of black money and its effects on the economy. To recommend measures to curb tax evasion and unearth black money. To simplify and rationalize the direct tax laws. Key recommendations: reduction in tax rates. The committee controversially recommended lowering the high marginal tax rates, arguing that this would reduce the incentive for tax evasion. Voluntary disclosure scheme. It proposed a voluntary disclosure scheme to bring unaccounted money into the tax net. Penalties for tax evasion. The committee recommended stricter penalties for tax evaders and a more robust investigation and prosecution system. Valuation of property. It suggested a method for the government to acquire property at the declared price to counter underreporting of property values. 2. The Tax Reforms Committee, Chelliah Committee 1991. When and why set up? This committee was formed in 1991 under the chairmanship of Dr. Raja J. Chelliah. This was a landmark committee set up as a part of the major economic liberalization program initiated by the then Finance Minister, Dr. Manmohan Singh. The goal was to create a modern, liberal, and globally competitive tax structure. Objectives: to reform the direct and indirect tax systems to make them more efficient, transparent, and equitable. To recommend measures for the simplification and rationalization of tax laws. To improve tax compliance and widen the tax base. To suggest a long-term strategy for India's tax system in the context of economic reforms. Key recommendations: direct taxes. Reduced income tax slabs. The committee recommended a significant reduction in the number of income tax slabs and a lower maximum marginal rate to encourage compliance. Lower corporate tax. It proposed a reduction in the corporate tax rate to make Indian businesses more competitive. Removal of exemptions. It recommended phasing out various tax exemptions and deductions to simplify the law and broaden the tax base. Tax on agricultural income. It suggested that agricultural income be taxed under certain circumstances. Indirect taxes. Move to VAT. The committee laid the groundwork for the introduction of a value-added tax (VAT) system, suggesting the merging of various indirect taxes. This was a precursor to the Goods and Services Tax (GST). Reduction in customs duties. It proposed a phased reduction in customs duties to align them with global standards and make Indian industries more competitive. 3. The Task Force on Direct and Indirect Taxes, Kelkar Committee 2002. When and why set up? The committee was established in 2002 under the chairmanship of Dr. Vijay Kelkar. Its formation was prompted by the need to continue the tax reform process, initiated by the Chelliah Committee, and address new challenges related to globalization and economic growth. The committee was tasked with providing a roadmap for a simplified and modern tax regime. Objectives: to simplify and rationalize the tax structure, both direct and indirect. To improve taxpayer services and reduce the cost of compliance. To suggest measures to strengthen tax administration and enforcement. Key recommendations: direct taxes. Higher exemption limit. It recommended raising the basic exemption limit for personal income tax. Abolition of certain taxes. The committee proposed the abolition of the wealth tax and the long-term capital gains tax. Modernization of tax administration. It suggested the modernization of tax administration by establishing a tax information network, TIN, and a more efficient system for processing returns and issuing refunds. Indirect taxes. Roadmap for GST. The committee strongly advocated for the introduction of a National Goods and Services Tax, GST, to create a common national market and eliminate the cascading effect of taxes. Further cuts in customs duties. It recommended further cuts in peak customs duties to align with ASEAN levels. 4. The Direct Tax Law Simplification Committee, Justice R.V. Easwar Committee, 2015. When and why set up? The committee was formed in 2015 under the chairmanship of Justice R.V. Easwar. Its purpose was not to overhaul the entire tax system, but to address specific issues of complexity and ambiguity in the existing direct tax laws. The government's objective was to reduce litigation and make tax compliance easier for taxpayers. Objectives: to identify and simplify provisions of the Income Tax Act, 1961, that are a source of litigation. To recommend measures that would improve the ease of doing business and reduce the compliance burden. To suggest administrative reforms to make the tax system more taxpayer-friendly. Key recommendations. Rationalization of provisions. The committee recommended simplifying provisions related to tax deduction at source, TDS, assessment, and appeal procedures. Reduced litigation. It suggested raising the threshold for filing appeals by the Income Tax Department and clarified certain legal phrases to reduce ambiguity and litigation. Administrative reforms. The committee proposed administrative changes to ensure faster processing of returns and timely refunds. These committees represent a continuous effort by the Indian government to evolve its tax system. They have moved the country from a high-tax, complex and compliance-heavy regime to a more liberalized, modern and technology-driven system. Their recommendations have been instrumental in significant reforms, including the reduction of tax rates, the introduction of VAT, and most notably, the implementation of the Goods and Services Tax, GST.